January 28th. That's not just another earnings date. For Tesla investors, it might be the most important checkpoint in months. Because behind the headlines, behind the noise, Tesla has quietly done something it hadn't done in a while. It grew again. But the real question is, does growth automatically mean the stock should go higher? Or is the market already ahead of itself? Tesla will report fourth quarter 2025 earnings after market close on Wednesday, January 28th. Management will then answer investor questions live. And this really matters, because expectations are no longer low, they're conflicted. Let's start with what we already know. In the fourth quarter of 2025, Tesla reported 434,000 vehicles produced and 418,000 vehicles delivered. These are solid numbers. Not explosive, not disappointing. But importantly, stable in a market where many expected weakness. This tells us demand didn't collapse, even with pricing pressure and electric vehicle competition rising. That alone reset investor psychology. But here's the part many traders ignore. Tesla deployed 14.2 gigawatt-hours of energy storage in the fourth quarter, a record quarter. For all of 2025, 46.7 gigawatt-hours deployed. This matters because energy margins are improving, demand is less cyclical than car sales, and Wall Street is slowly re-rating Tesla as more than just cars. This segment doesn't make headlines, but it stabilizes valuation. In the third quarter, Tesla reported $28.1 billion in revenue. Wall Street, though, had expected $26.4 billion. That surprise ended 2 straight quarters of revenue decline. So, why did that happen? Well, it came down to a few things. EV tax credit pull forward, improved deliveries, and stronger execution. So heading into the fourth quarter, the bar is, definitely higher. And markets don't reward just good, they reward better than expected. This is where psychology kicks in. Tesla stock doesn't trade purely on earnings. It trades on forward guidance, margin commentary, cost reductions, and, those AI and autonomy hints. Even just one sentence from management can move the stock. So investors aren't just asking, how was Q4? They're really wondering, is Tesla past the worst, or just between cycles? There are still risks. Automotive margins, price competition from China, slower global EV growth, and capital expenditure discipline. If margins disappoint, strong deliveries won't save the stock in the short term. Tesla has to prove it can grow without sacrificing profitability. That's the real test. For the stock to react positively, investors want 3 things. Revenue that confirms Q3 wasn't a one-off, energy growth momentum acknowledged, and confident, realistic guidance. Not hype. Not perfection. Just credibility. January 28th isn't about celebrating Tesla. It's about repricing Tesla. Is it a high-growth disruptor again? Or a mature automaker with optional upside? The earnings won't answer everything, but they'll decide the next direction.